Okay, welcome back. Welcome back to my video, guys. So it has been a very long time since I have not recorded my trading video because I was doing backtesting. I was learning more. I was doing backtesting, and yeah, I was just learning, and I was not trading for like 2 3 days. I didn't trade. Yesterday I took 2 trades, and both trades was a good trade. And today also I took this trade. So let me explain how I took this trade. So I'll just hide this, no need of this. And so now I'm trying to trade only the liquidity stick. So let's go. So how I took this trade? So I went to daily time frame, daily chart, and here I marked this liquidity area. So here is the liquidity area. Here is the imbalance. You can see here is a huge imbalance, and this imbalance was filled previously, and then again the price went up to grab this liquidity. So this break liquidity, grab this liquidity, and then in the character, and then the price is coming down. So that means in daily time frame we are seeing that it is in bearish market. The market is bearish. So we will try to look for bearish entry only. So this is one day daily time frame, and we have almost reached a key point, key area. So here you can see the market is bearish. It gives the liquidity in the character liquidity sweep, and here we can find there is a liquidity, and we had a huge imbalance here. So that imbalance was already filled, and here also you can see that there is an order block, and here also we can see there is a liquidity, high liquidity area here. So it will be so we are approaching this key area. So I'm 99% sure that it will reach to this key area. At least it will see this liquidity and may reverse back, back. Otherwise, if the price will just go down. And let's go to 4 hour chart. So after that, I went to 4 hour chart, and in 4 hour chart, 4 hour time frame, we can clearly see that it is in a downtrend. So break of structure, and here, yeah, we have already made a break of structure, and change of character is all the way up here. So this is in 4 hour chart. So now in 4 hour chart, we have seen there is a bearish candle. So in daily time frame also, we have bearish market. In 4 hour also, it is telling that the market is bearish. And let's go to 1 hour. So 1 hour also, like you can see that the market is still bearish, but let's see here. And so we have all received bearish market, bearish market, bearish market. So now what I'm going to see is I want to take a trade for bearish. I want to take a short position. I'm looking at the point where I can take short position. So in 1 hour time frame, here you can see that there was a break of structure. Change of character around here. It went up, and here we have this like order block, supply and demand, and supply area. So it mitigated that. And in 15 hour candle, 15 minute chart, you can clearly see that I have marked this area. So here is our liquidity. So and here is our another liquidity. The market is in downtrend. So here you can see here it swept the liquidity, it went up. Okay. So where the price was trying to go, the price was trying to go for this liquidity, to grab this liquidity. Here here you can see that there is a supply area. Okay, there is a supply area, and this was nearly a liquidity sweep, but it didn't sweep the liquidity. It was nearly a liquidity. So I missed this trade. I could have gone. I could have taken this trade, a long trade, but I missed that trade. And then after it reached this order block. So this is the order block. So after reaching this order block, I missed the trade again. So I found this all the way around here, around this area. Okay. So in 15 minutes, I saw this. I missed this trade. Another retracement. I missed that. Another retracement. I missed that. And then finally, I look for the another retracement opportunity. So from here, this bullish candle had formed. So I found a starting point of retracement. So at the retracement equilibrium, I use this equilibrium, and equilibrium 0.5% or 50%. So here, and just below that, you see how it sweeps this equilibrium. Just below that, I kept my order. Like I kept my order around there, 1130, around 34 something somewhere around. But I just get a round up and 113030. So you can see here 113030. I took the order here, and then placed my stop loss. My actual stop loss is this area, but after calculating my risk reward ratio, I can still put my stop loss at this area. So I put my stop loss here, and my first take profit is here. So why here? Because here we can see there is a liquidity. This liquidity, it will see the liquidity, and most probably it will just come down to save this liquidity, because here this red area, you remember I have drawn this red line on this level. So it is near to that level. So that means there is a very high chance that the price will come down to sweep this liquidity. Not this one, and here we have another liquidity, so I might have profited here. But I entered the trade in 5 minute chart. Okay, in 15 minute chart, I showed you this, but I went on 15 minutes, and yeah, and then after that I took a trade, retracement trade. Okay, my first take profit, this one, here is the liquidity. This is my first take profit, and I will see what the price will do. But my final take profit will be so 0.96%. That is a very good trade. It will be a very good trade for me if I get this done, and maybe even we can target this liquidity also. But let's not be that greedy. Just take this liquidity, and then I will be done with this trade, and I will check what will happen in this area. If there is a liquidity sweep, and I will see a change of character, liquidity sweep, change the character, then I will look for a entry position and I will take another trade. So yes, this is my today's trade. Thank you.